to get the so-called the price movement, and to use this price movement to project from the breakout point. So you realize that the index here, which is 11,634, is the same as this one. So I'm actually taking the height, the depth of that price movement to project that, and the projection from the breakout point is showing Nikkei might have a technical price target of 54,000. So when I extracted that data, Nikkei was still trading at 50,400. But we know that today Nikkei is trading in the region of 51,000 already. And then it is an all-time high. So imagine that towards 54,000, I do not think that it is something that's unexpected, or you can't imagine that, because Nikkei is trading at 51 plus already. Okay. Now, if you do want to tap into the Nikkei index as an opportunity without changing into yen or anything, right, then you might want to take a look into trading with warrants. Okay, now because this is the index, and the movement can be quite wide, quite fast, and that's where I just want to mention the price level that I've listed here is not relevant anymore. Okay, so yes, 52,000 as the resistance is still relevant, because right now it's trading at 51 plus. But I do not think that the support of 49 that I've listed earlier is relevant, because the price level, all right, has shifted. That means the support level has shifted to about 50,000 right now, which is a round number. But I still think that 54,000 could be and might be a very feasible technical price target for the current movement of Nikkei. Okay. All right. So the next part I'm going to cover will be stocks, but I'm just going to pass this back to Jamie, where she will talk about how to use warrants to trade into short-term movement of the indexes. Jamie, to you.
Thanks. I already feel like I can hear some attendees going like, what? We just want to continue hearing it. What do you have to say about stocks, Beanie? But yes, I just wanted to quickly jump in here to just say, what's been really very interesting with working like with experts like Beanie is, just last year, she was the one who called the rally in the Nikkei when it was 33,000 and saying that it was going to go to 40,000. At that point, the target just looked ridiculous, right? I mean, we're talking about new record highs and what have you. And then, of course, now we're talking about the Nikkei potentially supporting at 50,000, going to 54,000. So again, for those of you who don't look at the Nikkei, it has been a very nice trending market for around 1.5 years now. Still not too late. It makes these big, massive 5,000 point moves over the last half a year. And whilst everyone's looking at Hong Kong, indices and Chinese stocks and saying, well, we've got wild moves there, but the Japanese market has been moving a lot, so it's worth kind of putting it on your watch list and watching out, especially because we are trading so near to the resistance levels that Beanie highlighted, say at 52,000. We're not that far away. In fact, we've seen investors today come in to buy quite a lot of those put warrants, really betting that even though it looks like it could potentially go towards 54,000, but as in the short term, as we know, markets have been very wild. It could be on a nice trend. Of course, it always does these very sharp pullbacks as well, potentially to squeeze people out. We don't know. But if that was the case, what can you do? I think that one of the answers could be to use a tool like warrants to trade the extreme short-term volatility and to get in and out of key levels. Of course, you can get out, but there's nothing stopping you from getting back in at the key support level and riding it to 54,000, right? So I'll just need to share back my website, warrants.com.sg. I realize I haven't introduced that. Beanie, if you could just make me host again, I will be able to share my website.
Okay, you can share now, Jamie.
All right, there you go. So the website I've been presenting from is actually our website, warrants.com.sg. I would say best website in the world only because when it comes to warrants, we really construct these tools to make warrant selection and awareness of how long to hold on to the warrants for as easy as it can be. One of those tools I want to introduce to you today is called the warrant selector tool. Just from the name alone, you would expect that it will help you to select the warrants. How so? By going back to the 4 steps I talk about. What's the step? What's the first step? Based on your view, what are the entry, exit, and cut loss level? So I'll just start with the Nikkei. We just type in Nikkei 225. Well, it depends on whether you're bullish or bearish. The Nikkei today finished at 51,270, right? And very close to the 52,000 level. I guess the question is, are you going to be bearish at this point or bullish at this point? But maybe for the purpose of those who don't know how to use put warrants, because Singapore investors don't use it enough, I'll use the example of, say, a put warrant, okay, to bet on a pullback from the 52,000 level. Okay, so maybe you don't want to enter now because it's not quite the resistance yet. But if you put in, potentially the short-term resistance of 52,000 and you think it might pull back, to the support level of 50,000 before it goes nicely back up to 54,000, then you can put in the last price at 52,000. And what will happen is that the put warrants will update to a price when the Nikkei 225 futures is at 52,000, right? When you short the market, you obviously need to exit, right? And where do you typically exit when you short? You exit when there are buyers, when you think that the market could not go down further. Because as we know, whenever the market pulls back, buyers will always come in, right? Thinking it's a cheap level, based on their own discretion to come in and actually cherry pick and go long. So in that case, if you wanted to short, just like if you wanted to buy, you get out closer to resistance levels. If you want to short, you get out closer to support levels. And in this case, we can type in the 50,000 level, which is not far away. It's only 4% away from the resistance level that you're looking to go in. So of course you could make 4%, 3.8% to be exact, if you shorted the futures directly. But with warrants, what's going to happen if you increase the number of weeks to work out step 2, your holding period, you're going to find that if the Nikkei pulled back 3.8% in a week's time, you are going to make between 23% to 26%. So you're going to make 7 times to 8 times more than if you had shorted the futures, right? And this is really the power leverage. At the same time, how much did it cost for you to get into the position? And between 3.9 cents to 7.2 cents. So a really low capital outlay. Now, I talked about step 2 being the holding period that we need to be aware of. And what you're going to notice is that if you held on to the warrant for 2 weeks, the gains you are going to make actually now drops from 23% for this second warrant to just 15%. And for this top warrant here, RHJW, it drops from 26.4% to 20.8%. Well, what is happening here? Basically, for those who trade options, you already know it's called time decay, right? Where the time value of warrants will fall with time. And this cost is basically known as the holding cost, right? Which is something that you see in every financial instrument out there that provides leverage. It's just that they're not called time decay, but they're called something else, and it works the same way. The longer you hold on to the instrument, the more in terms of holding costs you're going to pay. And so if you keep increasing the number of weeks, what you're going to find is that the percentage gains of the warrants will fall, right? And you will then notice this second warrant is now falling to a level whereby it's only making you 5%, not much more than this 4% gain you will make from shorting the futures. So what this means is that if you're considering the second warrant here, LAUW, because it's cheaper, where you get in at 3.9 cents, you need to know that the maximum holding time, your time frame with this warrant is only going to be 3 weeks and no more than that. You can't hold more for longer than 3 weeks, because even if you got your view right, even if the Nikkei came down by 3.8%, now you're actually going to make a loss of 2.6%. Okay, so the holding period is very important. If you are choosing the second warrant, hold on to it for no longer than 3 weeks. But if you want to hold on to it for longer, then look at the first warrant, where it's going to make you 15% if you held on to it for 3 weeks. It's going to make you 10% if you held on to it for 4 weeks. But you cannot hold on to it for 5 weeks. So the maximum holding period for this first put warrant is 4 weeks. Okay, so this is how, step 2 is so important. Step 3, obviously, the effective gearing really is just how much the warrants will magnify your returns, and in this case is around, a bit less than 3 times more if you held on to RHJW for 4 weeks. Okay. All right. Okay, and now we're done with the Nikkei. I just want to move on to, say, the HSI now, where we use the example of a call warrant, shall we? Okay, so we've got the call warrant here after choosing HSI. And if you chose the call, the last price of the Hang Seng actually is around 26,600, okay? 660, I would say. So if you put that in, you're going to see that there are 4 call warrants to choose from. They cost anything from 1.9 cents to 8.1 cents. And if you put in the target level, so Beanie talked about how potentially 26,300 looks like a support level. And of course, we're traded well above this support level now. And we're looking at a target price of 28,000. We just need to put that in. That is 5% higher from 26,660. And again, you do step 2, increase the number of weeks to work out your holding period. And you see that in 2 weeks, okay, this warrants will make you anything from 11% to 50%. Keep increasing the number of weeks to work out the maximum holding cost. And you see that the first 2 warrants, you can continue to hold it for beyond 3 weeks. But the last 2 warrants here, you hold on to it, okay, for more than 3 weeks because you're now going to make losses. All right. So this is something you got to pay attention to. All right. And if you do a 4-week holding period, can I just check if you can look at my screen?
Yes, Jamie, yes.
Okay, great. So I was saying, if you were to look at this table here, it will tell you what your maximum holding cost is. And you need to know that, right? So that you can always still have positive returns when you get your deal. All right. Okay. And with that, Beanie, I'm just going to hand it back to you to talk about the stocks. Okay, Beanie?
Okay, no problem. Can I have the host, please? Okay, it's great. All right. Just want to make sure that it's shared properly. Okay, you should look at see my screen that shows stocks here. I just wanted to cover the Singapore as well as the Hong Kong stocks. Of course, the favorite would be DBS, but DBS is having its earnings soon, which is 6th of November. Along that, we know that DBS has been trending very well. And at the same time, because it's the bank stocks and we are into where the US is cutting rates. So we have 2 things here. One is that banks generally, the stock price perform better in a rising interest because then the NIM would be much better for the bank, right? But going forward, where we have a environment where it's going to be a rate cut environment, so how would DBS perform? But at the same time, DBS has good, solid fundamentals. The prospect is good, and as well as also a rising dividends. Okay, so what I did here is to note few things. Number one, DBS is moving in this upward channel here. So this is like what I mentioned as the accelerated type of a price movement. If price is to close above this channel here, the top of the channel, then DBS will move in that accelerated price movement, and probably we might see $60. But to see $60, there are a few conditions. Number one, it must be able to break the all-time high. Otherwise, this all-time high here, which is about $48.80, it's going to be the immediate resistance level. Of course, that if price is to move down, then we need to check again whether price can get supported by the bottom of the channel here. Where the bottom of the channel, it's which I estimated is gonna be around this high here. So that's about the $52.30 region, $52 to 52.30 to 52.50, around this high here. And if there should be a successful breakout of 54.80, then the immediate resistance will be 56.50. All right. The reason why I want to highlight DBS is because of its earnings, because as you know, right, earnings there, depending on what's the earnings, even though we have a lot of confidence, it could be that the better prospect of DBS could be priced in, and even with good earnings, good results, price might not react positively, which we know. So in any case, depending on where it goes, then you might want to use the structured warrants, whether it's a call warrants if it's moved higher, or it's a put warrant if it moved down, right? To hedge into your position, especially if you take a look at DBS. A lot of investors in Singapore, they own DBS. So how do you hedge the stocks in view of earnings that's coming? Okay, so the first thing would be DBS. Now, the second one, which I want to mention, is Sembcorp. Now, a few things in Sembcorp here. Why was there a drop in Sembcorp here? That's because of its earnings. So everything in Sembcorp is doing well, but one key segment is the China and its gas sector. It's not doing well, and that's why Sembcorp fell from about $7+ all the way to the low of $6. But however, in terms of price movement, what changed? Number one, there was a consolidation for about 1.5 months. Okay, so this was that consolidation for about 1.5 months. And finally, price broke out. Okay, so technically, it means that there was a bit of a digestion in terms of the bearish news, and then investors decided to either buy in or sell out, right? That's where the consolidation happens. And finally, the buyers won because price decided to trade higher, or rather price was being pushed up to trade higher. Okay, and technically another one key sign is that when price corrected, it corrected to the top of the channel and not to the bottom of the channel. It means what is the implication here? It means that as price starts to correct at this place here, it was able to hold well, and it held well at the top of the consolidation. That means that investors or traders are not willing to buy at the lower side, which is the low of the channel. Instead, they are right now willing to buy at the higher price. Now, the third thing is that recently, which was about 2 days ago, there was a breakout of this recent high here, and that's add on to that bullishness. So the question would be, yes, overall, Sembcorp is still in an uptrend, but the question would be, right, has the current pattern here, that means the entire pattern here, where we've seen that there was a low point that's being formed here, and high point being formed here, and a higher low being formed here, and the price breaks the high, right? Has this pattern, which is a typical reversal pattern of the downward movement, has it shown sign of a recovery? So of course that the immediate support will be $6.55, because that's where we need to see price get supported here. So if price can get supported here, then yes, the reversal pattern that we are seeing right now has already reversed this downward movement. Okay, now if it does, then the next resistance will be $6.75 to $7. Okay, now if it doesn't, that means that if it doesn't, that means that it doesn't get supported at 655, and instead that it move back down, then we might see the bearishness continue. And that's when if you can use both, either the call or either the put, depending on the direction, then it's very useful for you to trade into the short-term price movement of Sembcorp. Okay, now these are the two Singapore stocks that I've chosen. Now the other two Singapore stocks that I've chosen, the Hong Kong stocks that I've chosen, they have the warrants listed, right, would be Xiaomi and Pop Mart. So yes, we've seen Hong Kong stock market moved up, Hong Kong indexes up, right? But these are the two stocks that moved very well previously, but recently it's not trading well. Okay, that means that Xiaomi recently had an attempt to move towards $60, but it doesn't hold. All right, and it continue its decline here. Now, what I did is to join the Fibonacci retracement, and if you can see that there was a upward movement from this point here to this here. So as I said, right, it's moved from a low of $36 to about $60. Okay, $60 is the known resistance of Xiaomi. It's around here, right? So it's not been able to clear this resistance for 1, 2, 3 times already. Now, after it can't, and it starts to move down, it reacted to every Fibonacci retracement level. That means that as price starts to move down, right, I'm using Fibonacci to measure what are the potential support. So the first support came in at about 50% of this upward movement. The second one came in about 62%. That's the golden ratio. And finally, it couldn't hold, right? And it's on its way down. Now, today, Hong Kong market is closed, which also means that if we follow the Fibonacci ratios, then if price doesn't move higher, then we might be expecting Xiaomi to move towards the $42 region, which is the last Fibonacci ratio that's commonly used. So that's $42. It's the immediate support. All right. Now, again, that because price had fallen, then those previous supports will now become an immediate resistance. So if, let's say, for example, Xiaomi doesn't move to 42, or if it does move to 42, and then if it does rebound from 42, then the previous resistance, which happens to be 45, will in turn becomes the resistance level. So this gives rise to a very nice, good short-term trading. Buy somewhere around here, like the support level, and technically use the previous support level as a resistance level for you to exit. And if it's moved higher, then we use the next level until it has actually gone, much higher to show that Xiaomi has finally reversed from this downward movement here. But in any case, I'm not saying whether I'm bullish or bearish on Xiaomi, but it just have a very nice trading region here. Okay, and of course, the last one would be Pop Mart. The reason why I put in the moving averages is to show you that Pop Mart has really been moving very nicely in an uptrend. You look at the moving averages here since last year, mid last year, all right, and to early 2025, that movement in Pop Mart is so nice. Just go up, all right, just go up like that. Okay, then it comes down to the moving average. You just go up, stick to the moving average, and you see that moving averages has been really acting a very nice support. Okay, every time it just go up, bounce the average, it goes up, bounce, right? Now, one thing to observe is that the moving averages are acting as the cushion for price. Okay, you see that they are cushion for price. The moving averages are below the price. Okay, however, if you look at what's happening right now, it's sort of reversed already. The moving averages shift. Okay, it just reverse and flip, right? Such that right now the moving averages are on top of price. Okay, especially you start to see this moment here, right? There was a 20 and a 50 MA cross. So this is a bearish cross. But again, when price attempted to move up, okay, it just moved up, but just came back down, which again, it went below the moving averages, meaning the moving averages are on top of price. And that essentially would be a resistance. And that essentially give rise to the view that Pop Mart has a weakened momentum right now. That means the momentum of that price movement is so much weaker now than versus what we've seen in the past. Okay, that's one. Number two, we are seeing a huge potential head and shoulder pattern. Now, what is this head and shoulder pattern, right? It's a reversal pattern. It's a reversal sign to say that the previous uptrend like this might not be that strong anymore, okay? Or if it breaks below the neckline, which is the one that I've drawn here, which is the green line here, then it states that the head and shoulder pattern came true already, all right? And that the whole uptrend, it's going to reverse. But again, right, when it starts to reverse, it's not going, I mean, many times, right? It's not going to just boom like that, you know. It will go through many rounds of price consolidation, such as, for example, it hit a support level, it goes up and it moves down, it goes up, you know, and finally to reach its price target. And this is usually what priced action will do. And that becomes a trading opportunity for us because we could just buy at a support, which at this moment, right now, PopMart is at a support level of 230. Okay, it hasn't shown sign of a reversal yet, but what it's showing right now is that there are two dojis. Dojis means that these are candlesticks that looks like a cross. Now it shows that price is right now in an indecisive mode, right? Traders are not decided whether it should be up or it should be down, but they are spotting that 230 is a very, very important price level. Okay, now the next level, which is important for traders, would be this 252, right? Because that's where it consolidated. Essentially, these will be the resistance level. Even if, let's say, it got supported, we still need to know that whether it can overcome the immediate resistance, which is 252. And if it doesn't, then this would mean that price is going to correct further down more. Okay, so 252 is the resistance. Above it means that PopMart will resume its upward momentum. But if it doesn't get, you know, broken above, right? That means it doesn't trade above 252, and instead it breaks this 230 level, right? So this is going to be bad for PopMart because it's going to mean that by trading below 230, which is the green line, then this massive head and shoulder is going to complete. Now, what I've done here is to, you know, point out the black line, which is the moving average 200. Now, this moving average 200 is a long-term investors moving average. By trading below the 200 moving average, right, it also means that long-term wise, traders are not too enthusiastic, investors are not too enthusiastic, and that probably if price is to go below 213, which is the price of the black moving average, which is 200 days moving average, then the long-term trend of PopMart is probably going to flip the other side. Okay, now what I did is that I did a calculation of the possible price target of this head and shoulder pattern. Okay, that means that if PopMart is to realize this head and shoulder pattern, then what would be the price target of this head and shoulder pattern? Now, the key thing is that do read my article tomorrow, because tomorrow I'll be writing an article to publish this article here to write about the price target of PopMart. And it's a price target that I think you wouldn't imagine. So do keep a lookout on the price target of PopMart if the head and shoulder pattern should form. And it's a price level that you're probably going to jaw drop. So look out for the article. Okay, back to you, Jamie.
Beanie, I like how you just gave everyone a strong reason to follow you on your, to the moon channel. So indeed, we have new PopMart call and put warrants listing tomorrow, and just in time to trade Beanie's views. As you can tell, she spent a lot of time on PopMart really because this is one stock that's just perfect for using warrants with. Why? Because it literally goes up 7% one day, down 8% the next, up 5% and then down 10%. Basically, the price targets get met very quickly, which means with warrants, because they get, met within such a short period of time, with the warrants, you really can maximize your returns, right? So look out for that. I just want to go back to sharing my website, where we ended off we ended off on the warrant selector tool, which I hope you can now see. Can you see that, Benny?
Yes, yes.
Okay, so just now I was talking about the HSIs and something in my head feels like people are going like, oh, HSI up 5%, but based on what you have demonstrated with the selector tool, Jamie, you're telling me basically essentially there's only one warrant, VTTW, which the maximum I can hold onto it for it's only 4 weeks. Well, that's because the upside target's only 5%. Basically, you find that the bigger the targets, right? The more the underlying moves in your favor, the more gearing you're going to enjoy, such that you can hold on to it for a longer period. Now, I've just typed in 29,800, which is 12% from here. But because if you had paid attention to Beanie earlier on the HSI, the longer term target is actually 29,800. Now, you will see that now, if I put in 29,800 as the target exit level, you can suddenly hold on to 3 warrants for longer than 4 weeks. You keep increasing this, of course, these 2 warrants here would have expired. So you can keep holding on to these first 2 warrants basically for as long as 7 weeks. And it's still going to make you 85%, 30%, which is more than the futures itself. And this first warrant, basically, the maximum you can hold on to it for is 8 weeks, which is 2 months before it expires. But of course, what happens? There will be new warrants, next week and the week after. So there will be new warrants to roll into or switch into if you really wanted to get in position in the HSIs already. Okay, so this is the selector tool for you. Again, very true to the 4 steps. Knowing your view, knowing what the maximum holding period is, which is very important, telling you what the gearing you can expect. And finally, all the warrants found in this selector tool are only warrants on tight spreads, okay? We do not show you warrants on wide spreads because it doesn't make economical sense where you trade instruments on wide spreads. So immediately you lose money when you flick it back, or basically the market has to move more for you to break even. Okay, and now I want to talk about another tool because you notice that selector tool only tells you in terms of weeks, right? Which is very vague, right? Because I can't even tell you the date 1 week from now. I know it's November, but I don't know the exact date. And so we have got another tool called the calculator tool for investors who want to use and pinpoint to very specific dates. Why? Because basically we're in the midst of earnings season, ladies and gentlemen. We talked about DBS reporting on the 6th of November. We've talked about, the likes of Xiaomi, which should report sometime in the mid of November. I think the dates are not quite confirmed. Some say it's 17th, some say it's the 23rd. But regardless, you've got actual dates that you want to look forward to, right? Because you know it's an event risk, right? Earnings will always be an event risk, either on the upside or downside. It usually will lead to more volatility in the shares. And if so, we can use this tool called a calculator to work out, again, the 4 steps, right? Your view, your maximum holding period, the kind of gearing you can hope for. But in order to use this tool, you need to already know the specific warrant that you're keen on looking at, right? Because it calculates for every individual warrant. So I would say use the selector tool, narrow down to the warrant of choice, and then you can come to the calculator tool to see what the exact date of the event risk you're looking at and the impact of the warrant. Okay, so I'll start off with DBS. Why DBS is basically one of the most popular shares owned by investors in Singapore. If you didn't you didn't write it the whole time. Of course, or if you are currently a shareholder, you basically maybe you want to look at potentially using a put warrant to hedge the downside risk. In order to choose the put warrant here, I've just basically quickly selected the last put warrant here on the list. Why? Because it's it takes the longest to expire, right? So they are ordered in terms of the expiry date. So this will be the longest dated NATW. And it is the warrant of focus and trending. It's got a fire logo. Basically, if you look at our warrant search table, it will show you a fire logo, which means it's the tightest and the highest liquidity. And we want to just kind of use it to work out, if we were currently a shareholder, how we can use a DBS put warrant NATW to hedge around the earnings day, right? So DBS today finished at 53.70, not that far away from the resistance level that Bini talked about, which is around 54.80, right? So we want to really pay attention to that. Of course, if it surpasses 54.80, we think that it could potentially go higher to 56.50. So So there are really two things we can do here. But let's say we come from a viewpoint of a shareholder, because like I said, I don't know how many of you hold on to DBS shares, but out of 5 investors, one would say they are a DBS shareholder or look to participate in DBS at some point in time. So okay, so let's say DBS goes up to 54.80, sometime closer to the earnings day. The earnings day is going to be the 6th. So say it goes down the 6th, right? And we're getting a bit nervous, right? We are shareholders. We're not selling off the share because we are bullish on DBS shares in the long run. We want to continue holding on to it because maybe your buy price was, I don't know, $18, right? I've most recently heard an investor tell me that she bought DBS shares at $10. She's still holding on to it. So yeah, but you think that in the short term, there could be a very sharp pullback. In that case, because of earnings season, because of the earnings date, you can then consider this put warrant. But because you are inherently long, when you use a put warrant, you're really wanting to only make money to cover your portfolio loss when it comes off, right? To the support level where you hope that the share will continue to rebound. So you get out of a put warrant at the support level. And let's say if the support level in the near term we think could be $52, right? So that, is about 5% lower from here. We can then use this target exit slider to continue to increase the date so that we can simulate the warrant price or the price return from the put warrant where we use it to cover the downside or to hedge the downside. So what this is saying it basically on the 6th of November, if DBS trades to about 54.80, the warrant price will be around 5 cents, right? The calculator is simulating that for you. And if it went down to $52, let's say maybe 28 days from now, right? Closer to Christmas, right? It does pull back to $52. Now, basically, this put warrant will make you 28% return. So that's about more than 5 times, 5.5 times more to cover your loss of 5.1%. But if it gets there, you want to get out. You want to cash in on this return. Why? Because if you hold on to it with warrants, what time decay will set in, right? If you keep holding on to it, you see the gains will drop. In this case, the maximum holding period that you really should hold on to this warrant is no more than 49 days. Basically, if DBS doesn't come down to $52, let's say if it stays at $54, you should still exit with a loss here because basically, even if your view was right, you held on to it for longer than 49 days. At some point, it's actually going to lose you money, right? If you hold on to it for 54 days, you're not going to make any money at all. So with this warrant, you just need to know with a target price of $52, you have to get out of it within 49 days by the 49th day. But otherwise, let's say if it went down by, in a month's time, you're going to make this magnified return of 26% to cover your loss, and you should get out. Okay. So this is the case of DBS. Of course, if you're bullish, what you can do is you can then change this to a call warrant. And then you kind of work out, whether you want to exit at $56 and then you move the date to maybe say the earnings season, the earnings release date of 6th of November to see, if you think DBS is too expensive, you're not wanting to get in at 53.70 now because it's going to cost a lot. You can then get in via this call warrant at 5.9 cents and then get out when DBS goes up by 4% to $56, hopefully because the earnings are much better than expected. And then you can cash in with a 39% return. Okay, so this is how you can use the calculator tool for DBS. I just want to quickly, because we talked about a couple of stocks, I want to talk about Sembcorp Industries, which right now probably looks a bit attractive. Again, I'll just choose the longer dated put call warrant here, which is PGIW. And again, just quickly simulate for you. Beanie talked about how, it's got basically Sembcorp Industries is sitting right on the support level, which Beanie talked about. So if you think this is worth a long, or if it continues to go up maybe to around like 660, you think, it's well supported, and you are aspiring towards, the first resistance level of 675, which is only 2% higher from here. You can then use this calculator to simulate the returns. In this case, for this warrant, if Senco Industries, need quite a while, and then by quite a while, I'm talking about more than 3 weeks to get to 6.75, then your warrant will make you only 4.8%. But of course, if this is a very small percentage change, 2%, it can happen in 3 days, it can happen in a week's time. Then you're going to make 9.5%. So in short, what you're going to see and notice already is that the shorter the stock takes to achieve the target level, the more magnified returns you're going to make. Why? Because you are subjected to less time decay. But even if you wanted to hold on to it for a long time, if the stock moves in greater percentage, right, then you find that even if you held it for about 44 days, you're going to continue to make a magnified percentage gain. Why? Because now the stock has moved more in your favor. There's more gearing to cover up and overcome the time decay. Okay. So in the case of Senco Industries, I think it's a rather compelling one. Why? Because we're really seated right at the support level. So it's like, it's an action item, literally call to action. And you can then use this tool. And in this case, if it goes to $7, basically the maximum time for Senco Industries to go to $7 will be around 51 days from now. Okay, so Semcom Industries need to move to $7 in about 1.5 months, closer to 2 months. Okay, and that's the maximum holding period. But of course, if it moves there 6% higher in less than, in say 3 weeks time, you're going to make about 3 times more than if you had bought Semcom Industries shares directly. Okay, and then the last one I want to show is Xiaomi. Xiaomi again, as Beanie said, this one, a bit of a disappointment. It was moving up quite a lot. Why? Because it was launching EVs, and I remember Beanie sharing with me personally that she found the Xiaomi SU7, was it? Beanie, extremely good looking. She was in China. She said in the Xiaomi, she said, "Well, this is just fantastic." Of course, Xiaomi has also launched their own phone to compete with iPhone 17. So, again, a lot of things going for this company. The share price is moving a little bit all over the place. Right now, it's come down quite a bit. I believe Xiaomi shares are currently trading around 44.50 thereabouts. Beanie, correct me if I'm wrong. So of course it's going to open tomorrow. I think maybe a bit more bullish because of how the talks are ongoing. Seems positively between China and the US. Of course, you've got positive developments of Trump in Japan. Maybe it's going to collectively bring stocks a bit higher. But if you think that potentially, Xiaomi is an interesting one, is trading in the channel. Of course, you can either go long or short. So you can then put in the price levels that Beanie was referring to, and you can either use a call warrant or you can use a put warrant to simulate. Beanie, can you remind me the Xiaomi target level that you were talking about?
I don't think I have a target level for Xiaomi, but it's more for the resistance level. Immediate resistance is 45.70 and immediate support
45.70.
is 42.20. Support is
All right. So
42.20. Yeah.
okay, so let's say if we think it went to, all right, then why don't we use a put warrant again because it's closer to, so again, it can go both ways, right? If you use a call, you might want to enter only when it's around $42, right? Because it's a support level of 42.20. We don't know when that will happen. It could be, next week. Again, it's a very volatile market. Let's say if it happens next week, then this calculator will tell you can get in around 1.8 cents, right? And then if you think then when you get in, you want to get out, around the resistance level of around 45.50. I think you said 45.80, but let's say we get out a bit earlier. You can again just see how long to hold on to this warrant for. You see that in about a month's time, if Xiaomi went up by 7.8% from the support level 42.20, you're going to make around 17%. Of course, if it took a shorter period of time to do so, you're going to make more magnified returns, right? So to answer step 2 of selecting a warrant, we always want to work out the maximum holding period. And in this case with Xiaomi, you should not hold on to it for longer than, let's see, then 36 days, because as you can see, by the 41st day of holding on to the warrant, you already make no returns, even if Xiaomi rebounded 8%. Okay. So you just need to know you should be holding in for no more than about around a month. Okay. And Xiaomi is a very volatile share, can probably go 8% in really just a week's time or even in a day's time. And if so, you can make around a 5-time return via the Xiaomi call warrant. Of course, you can use it the other way, whereby you want to short Xiaomi at 45.80. You can then use the put warrant, and again, same thing. We don't know when that will happen. If that happens tomorrow, for example, because markets are very bullish, and you think, I just want to, again, just use the put warrant to either profit from the downside or hedge, then you want to do the reverse. The exit will be at $42, and then you continue to hold, move the calculator, all right, to see how the put warrant will perform given Xiaomi short drop, or where you shorting it down 8%, right? So for this warrant, basically you can't hold on to it for Xiaomi. Like I said, it's gonna I don't know the exact date because it's not confirmed. It could report on the 17th. All right, you want to get out by 17th because then it could give the stock another big move upward or downward. But if you want to get out on the 17th or just before, okay, then if Xiaomi shares did pull back 8%, you'll make about 42%. But if it reported on, say, the 24th of November, then of course you can, hold on to it for longer, 25 days. It's still going to make you magnified returns of about about almost 5 times, right? So this is how you can use Xiaomi call put warrants. This is how you can use DBS call put warrants to trade very volatile moves, which I think we are about to see just again with the interesting turn of events that's happening between the US, China, and US and everyone else, actually, for that matter. We don't have much time left, and so this is really the two tools I want you to know about: the warrant selector tool and the calculator tool. And the gist of this with warrants is really this: they're not meant to be like shares. You're not meant to hold on it for a long time. If you want to be a long-term shareholder of PopMart and you want to collect it at around 215 and ride it all the way to hopefully, to new highs at $400 or whatever, please buy PopMart shares directly. But if you think that the levels, PopMart is just swinging between key levels a lot, and you don't know if it's going to hold at the 200-day moving average. Yeah, and there's just so many support resistance levels to look out for, and you think you want to ride the different kind of long short opportunities, then you might want to use a warrant. But as I've used the tools to demonstrate, always be aware of where to exit, where to cut your losses, and the maximum holding period, right? Because warrants can magnify your returns, but they can also magnify your losses, right? And last but not least, as long as you use the tools, as long as you know how to use the instrument, of course, we're really talking about, like I showed you, even if you held on to the warrants for 3 months, basically you're going to make returns between 69% to 300%, as long as the shares or the indices move heavily in your favor. Okay, so know the tool, and hopefully with the trading vouchers you're going to receive after attending this webinar, you're going to use it to make you a lot of money in this very volatile market, or at least to hedge your risk in this very volatile market. And with that, I've come to the end of this presentation. We can now enter into the Q&A. If you've got any questions to ask Beanie or myself, please feel free to type it on the chat. There is a Q&A, I believe. But I don't know if they're allowed to ask questions out loud. Tiger, is that something they can do? Because if you raise your hand, I think we can unmute you. But otherwise, if you're a bit shy, you can just type it on the Q&A. We'll be happy to take your questions. Every time I meet Beanie personally, I have 1,000,001 questions because I like to pick on her brain on what is good, what I should look out for. So please use this stage, use this opportunity to ask her on her
I think
views.
that I can also show my how to say follow page, right? So that tomorrow they can read about the PopMart target, because it will be really, really overwhelming. Yeah, let me just try to show that. Yes, Jamie, you do have a question. Show me how to go to menu for warrant trade from Tiger Ads. I think there was another question also just now about how to assess and how to trade the warrants. Yeah.
Okay, well, okay, so there was an anonymous attendee who said, how exactly to buy warrants in the Tiger app?
Mm.
Once I've identified, fantastic, anonymous. Once you've identified, you can then use your trading platform to trade because with the Macquarie website, we're not a broker. We actually are just a market maker, right? We provide bid and offer prices for you to trade in and out of. So Tiger has already answered this. In your app, go to quotes, the search function on the top right, and input the code. Now, all warrants have that four-digit unique code, as I've showed you earlier. Every warrant has got its unique code, right? So, for example, the DBS warrants we talk about 8Y5W. And S&P and Nasdaq you've got YK6W, etc., etc. So you type that in. Tiger Brokers, are you able to do a demo? Otherwise, I'm afraid our attendees can only go by your response on text. Will you be able to demonstrate? There was also another question, right? How to go to the menu for warrant trade. So it's the same thing, Paulus, Philip. You go in your app, go to quotes, go to your search function and input the warrant code name, and then you can buy and trade it away as you would with any share or any instrument for that matter. I hope that answers your question, Paulus, Philip, as well as Mr. or Mrs. or Miss Anonymous. Beanie, maybe you want to just flash your QR code onto the moon again,
Yeah, I
so
need
people can
to have
see.
the host. I need to share the host. I need the host. Yeah.
There you go.
Okay. So this is my QR code. I didn't show it in the presentation screen, but then here you go. So you should be able to see this my QR code to follow me. The article should be out pretty fast because I just completed that article. So it should be out tomorrow. Yeah. Okay.
Great. And just to
Mm.
share, we're also on the To the Moon. We're very new. We're a newbie there. If you want to follow us, please go to Macquarie Warren Singapore. We've got the green tick there to blue tick that verifies it as an official account. On a daily basis, we share all the flows, all the news, all the color on warrants. Obviously, most recently we actually had a pot mark collectible giveaway to those who are trading warrants. So, we've got a lot of these campaigns. We will have one more that will come up where we give away pop mark collectibles for those who trade warrants. So please join us, follow us on Tiger Brokers, To the Moon, Macquarie Warren Singapore. Otherwise, for those who want to contact us instantly, I just want to share back my screen, warrants.com.sg, where, my promise to you is you're not going to be alone in the warrant trading journey. If whatever I've shared with you today is still a bit complex for you to understand, I want you to know that my job is to be there for you. And so we have a number 660100289. You can call us during trading hours. I'd be happy to help you and take you through whatever queries you have on warrants, use the tools and demo it to you. We also have a advanced warrant seminar coming up on the 4th of November where we would uh, go more in depth into warrants. Over dinner will be provided, and we will be happy. I will be there to take you through warrants 201, and tell you more about warrants, more about the different tools available and what are the common pitfalls to avoid, etc., etc. But if you can't wait for it, you want to trade right away, well, call me at the hotline tomorrow morning during market hours and be more than happy to help you. Okay?
Jamie, there's a question for you. It's under open Q&A. Is there any liquidity risk for the warrant trading? Should we choose only highly traded warrants in terms of volume?
Very good question. Now, I just want to show you on the tool Warrant Search where you can see the bid and offer volumes that Macquarie provides as a market maker as well as the prices. Now, We understand that everyone obviously wants to go for something that's the highest liquidity, and so we put up a hot, fire logo to denote trending warrants whereby they've got the highest liquidity. Now, the question I guess you are trying to allude to is there liquidity risk? Will this high liquidity then disappear with time? And I say it's a very good question because the answer is it could. It could fall, the liquidity that you see, the spreads could also increase. Why? It's a bit more advanced for me to go in depth into, but basically when warrants approach their last trading day, right? This Alibaba warrant, where in December now it's gonna, or in January now it's gonna expire. What you're gonna find that what you're gonna find is that the offer volumes that we put out is gonna be less. It's not gonna be as much anymore, and the spreads might go wider because we're trying to tell you to stay away from the warrant. Okay, and then the fire logo might be attached to another trending warrant instead. So there is that risk there, whereby the liquidity is not always going to stay the same. But if you're talking about liquidity risk in terms of what if there's nobody trading? Can I still get in and out of a warrant easily? Well, the answer is yes. That's why warrants are different from options, where with options, if no one was putting up quotes for you to buy and sell from, you cannot get in and out of easily. But warrants have got the presence of a designated market maker like Macquarie to offer bid and offer volumes and prices at all times, and they correspond to the underlying price movement. So the risk, I would say, is much lesser. But like I said, it could, the liquidity could shrink, but even if no one was trading it, we will be there, to get you in and out of a warrant. Which are the instances or examples of us not being there at all? Basically, when the underlying is not trading, for example, Hong Kong stocks, they close at 4 o'clock. So if you wanted to trade out of a Xiaomi or Alibaba at 4:15, you cannot because we have no markets there. Or in this case, this Alibaba warrant is going to expire soon, 29 December. And, closer to date, it's got basically, it's worthless because maybe Alibaba was trading at only $120. I wish I haven't gotten Alibaba, but of course now it's in the money. But let's assume, let's use a put warrant instead, okay? Alibaba currently $170, right? This warrant's going to expire soon. We're talking about 25th or 24th of December, Christmas Eve. And then you want to get out of it, you want to cut loss because essentially it's going to expire worthless, right? Alibaba at $170. This is a put warrant. The strike is $120. There's no way it's going to get there. Then you might find that there is no bid price at all. There's no bid liquidity and you can't get out of it. Now, what happens in those instances? In such a situation, you can actually call me, and then we'll see if we can get you out of position out of goodwill. But otherwise, it's just going to, be worthless as it would be at expiry. So there is no bid price for you to get out of. So these are the rare instances that can happen. But otherwise, the answer to your question is you can trade a warrant even if no one was trading. I know investors generally feel more secure when everyone is trading. It's a kiasu mentality also. If it's trading, 50 million units, our HSI warrants, very popular. It can trade 100 million as well. People think, oh, it must be a good warrant. But hopefully, through the examples and the steps I've given to you, don't just rush into a warrant because everyone else is trading it, but you get into a warrant because it is appropriate for your risk levels, because it's appropriate for your entry and exit, and cut loss levels is appropriate for your holding period. Okay, so in short, liquidity risk, you don't have to worry about it because there's a presence of a market maker, but there are instances where, there could be no liquidity, such as when the stock is not trading, when the stock is the warrant is worthless because the stock is very far away from the spot price. Hope that answers your question.
There's one more for you, Jamie. Is there a better time to look at warrants, start or end of month/week?
Well, I would say that it's the same question you're asking on, is that a good time to look at stocks, right? Because ultimately warrants track stocks, right? And when you look at it, it's really when you think the stock looks attractive. So any time of the day. But if you're talking about when can I get into position? Well, it's any time of the day, whenever we're quoting. So to give you an example, we have got this tool called the Live Matrix tool. Apologies, I didn't share about it earlier, but it can be found on the warrant tools drop down, Live Matrix. Or basically, as long as you click into a warrant, right, it will automatically take you in a Live Matrix. The line matrix shows you exactly where the warrant is trading alongside the stock at that point in time. So what you're going to see here is an Alibaba call warrant, okay, that is quoted at 4.3 cents bid and 4.4 cents offered, when Alibaba shares are trading at 170.9 bid, 171 offer, right? This is going to update automatically during the day, regardless of the time of the day you look at. Right, regardless of the time of the day you look at, it's going to update according to where the share price is. So you can, you can trade it any time of the day. I think you get in and out of it really depending on where the stock trades, right? Not because 9 o'clock is the best time to trade. No. You can actually put in your order if you want to get into Alibaba at maybe 170. In this case, it's not there yet. You can actually put in your order at 4.1 cents bid or 4.3 cents. You're going to get done for sure if Alibaba goes to 170. If you wanted to exit during the day at 174, you can then put your order on Tiger at 4.9 cents and then you can go to work, right, and not worry about it. But just note that with warrants, you have to refresh your bid and offer prices that you put in for warrants every day. Why? Because of time decay. The warrant prices today could be different tomorrow, right? Today at 170, Alibaba call warrant is 4.1 cents. Tomorrow, 170, Alibaba call warrant could be 4.0 cents. So you have to amend your orders accordingly every day or every morning, before you start work. That's something you can do. But there's no good time. I think the time at which you look at really depends on when you think is the time the shares will go to your entry or exit cut loss levels. Note that our market making hours track the underlying shares. So with Hong Kong stock warrants, you will only see our quotes in from 9:30 a.m. because that's when they open, and we pull 2 minutes before the close, 4 p.m. because we want to hedge. With the HSI, which opens earlier, we quote from 9:15 to 4:28, 2 minutes before the 4:30 close. With Singapore shares or US indexes, we quote from 9 o'clock when the SGX market opens, and we pull 2 minutes before the SGX market closes at 5. Okay, so I hope that answers your question.
There's one more question for you. I think that this is quick to answer. Are there any warrants available to trade on commodities like gold and oil, or limited to indices and stocks?
Thanks, Shank. Well, we are looking forward to hopefully having warrants track commodity ETF, for example, or even commodity futures. But unfortunately, I would say MAS/SGX rules at the moment don't allow warrants to track ETFs or commodities. But hopefully that will happen next year. Look, if we could track a gold ETF or even gold, I think we will have Beanie talk about it already because it's obviously
I
very
love
hot.
gold
And
trading.
Beanie, yeah, and Beanie actually specializes across assets, right? So,
Yeah.
well, I would say hopefully by the next time we partner up with Beanie to talk, we will be already talking about gold. But unfortunately, we can't now because SGX rules do not permit that to happen. But yeah, so all the warrants we have mainly track Singapore shares, Hong Kong shares, US indices,
But you can look
and
at
of
my
course Asian
YouTube video
indices.
because I just covered one on gold, just very recent, where when gold was not even at 4,000, I predicted that gold can go to 3,009. So rebounded from 3,009, is now trading at 4,000 and 78 or something like that. Yeah. So watch that video. Mm.
There you go, Shank. All right. Okay, so it's 8:31. Thank you. A bit of an overrun. Thank you for all your interest and attentiveness. Hopefully that translates into actual P&L, actual returns for you in this very volatile market. Trading opportunities abound, and hopefully you can use warrants to make money from it. But just remember, always know the risks when you trade any instruments. And if you want to understand the product better, get in touch with me. The website to note is warrants.com.sg, and I'll hear from you. Be very happy to hear from you if you have further questions. Okay. Otherwise, I'll see you at the advanced seminar on 4th of November. Okay. Thank
Okay.
you, everyone. Have a
Thank
good
you.
night
Bye-bye. Good night.
and speak soon.
Bye.
Bye.